Let me switch focus. Coal India in focus as well. In an exclusive conversation after a steady Q4, Coal India says it is targeting 815 million tons of production in FY27, which is a 6% growth that's supported by strong inventory and capacity additions. The company expects to maintain EBITDA margins around 30 to 33% odd and has outlined a 1 lakh crore capex plan over the 5-year period going forward. Here's an excerpt of that conversation. Listen in.
Contractual capacity stands at 120% of the requirement, which gives an adequate execution buffer for all of us. Then 5 new mines will also be added during this FY. On the evacuation front, 13 numbers of closed loop mechanized CHP silo system along with the first mile rail connectivity will also be commissioned. This will add 131 million ton per annum capacity to the existing capacity of 432 million ton. So collectively, all these initiatives put together, it gives a strong boost to the operational readiness, and it will act as a significant catalyst for achieving the production and offtake targets for FY27.
Mr. Agarwal, can you come in here and give us a sense of the margins that you're working with? Because in Q4, you ended the margins with 27.3%. Is that the nominal margin that you will be targeting for the next financial year as well?
If you see the EBITDA for the current year is around 32%. Now we are not going by quarter to quarter. Our EBITDA stood at 53,200 plus crore rupees for the whole year, which translates to 32%, and we are looking the same level of the EBITDA will be able to maintain in the FY27.
And how do you see pricing to play an important role in this financial year? Are you looking at e-auction prices to rise this year?
The e-auction prices, they normally vary along with the trend of the international market prices. So year before last, we had a very solid increase in the e-auction premiums. And last year, because of the subdued demand, the premiums have fallen somewhere around 38%. Going ahead in this year, in the month of April itself, we have achieved somewhere around 51% for the quantities what we have offered. And for the full year, I think we should land somewhere around 45 to 50% premiums should come if the demand projections, they remain the same way they have unfolded in the month of April.
International coal prices have risen because of the West Asia crisis. Are you able to capture the entire value increase in these e-auction prices?
Either due to the West Asia crisis or otherwise also due to the international demand-supply dynamics. Whenever there is an increase in the imported coal prices, there is a corresponding increase in our e-auction premiums also. So this has already started getting reflected in our premiums since the month of Feb. And going ahead, even if we go by the 7-year long-term averages of the e-auction premiums, the indicators are that somewhere we should be somewhere around 45 to 50%. And we are able to meet the entire demand of the country, which has arisen on account of this West Asia issues.
Mr. Agarwal, 40 to 45% jump in premium. There's a 6% jump in volume, which is also coming accompanying this. And you're confident about the 32% margin, maintaining that or going about 32% in FY27?
Yeah, there are the factors which are increasing in the input cost also. If you see the diesel prices and the explosive are also increasing. So I think all these things will neutralize with the e-auction premium, and we will be able to maintain our EBITDA at the rate of 32 to 33% in the current year also.
How do you see the takeoff of volumes in the month of April? It has been little weak to start off with. And I think it's because of the unseasonal rains also that has impacted you. But do you think going into the full year, you may see an increase in volumes coming in? Mr. Chaudhary?
Yeah, we anticipate an increase in volume because the consumption by the power sector in the month of April has been phenomenal. And they have been consuming somewhere around 25 to 26 lakhs per day, or 2.5 to 2.6 million tons, which is a good growth as compared to the last year. And the power plant stocks, they are also at a very comfortable level of 50 million ton. And we intend to keep the power plant stocks somewhere around the ranges of 50 only, so as to give a good buffer to the power plants there. So last year was slightly subdued coal-based power demand because of the seasonal rains which had happened. This year, probably this thing is not going to happen. And even with a normal rate of growth, I think we should be on track to achieve the targets which have been set by power sector.
How do you look at the demand for coal, given the fact that temperatures are high, early onset of summers is there, peak power production is happening for the last in the last few weeks, and what we hear is that the coal stock is roughly around 4 to 5 days in many of the big power plants. Is there a plan to augment that in the coming days or weeks?
The power plant stock as of yesterday was more than 50 million tons at all the domestic coal-based power plants. And this stock was somewhere around 54 million tons at the beginning of the month. So 50 is the range what we are looking ahead going forward. And based on the supplies what we are getting from Singareni coal companies and the captive miners and from CIL, we hope that we will be in a position to maintain the stock of 50 plus.
You, Mrs. Sairam, you spoke about the fact that new mines are going to come into play. What is the kind of investments that you're going to put into for them to get commercialized?
What is the level of?
For the new mines which are going to come into play, the capex that you're looking at?
Yeah, capex, as far as capex is concerned, we are targeting a capex of 1 lakh crore in 5 years down the line. So that is our capex target. And this capex target also includes the new business initiatives other than the coal portion. So all these combined together, roughly there will be a capex of 20,000 per year average. That would be our average capex.
Mr. Agarwal, can you also give us a sense of the kind of capital allocation that you will be doing across various segments and new opportunities?
Yeah. Actually, we had planned what the CMD sir has told, 1 lakh crore capex in the next 5 years. Out of that, 60 to 65,000 crore rupees is for the gasification projects, 15 to 20,000 crore rupees is towards the renewable energy, and 10,000 crore rupees is towards the mines and some acquisition projects we are targeting in the next 5 years.
And how do you see power demand, Mr. Sairam? We have a lot of capacity coming in from the renewable sector. Do you see power demand, to be tilted more in favor of renewable power coming in, and so the demand for coal may come down in the future, in the next 5 years, as we reach that 500 gigawatt target of renewable?
See, if the projections are any sign of improvement in the coal-based power demand, it is a good sign for all of us. Because last year, the peak demand that was met was 240 gigawatt. This year, on 25th April itself, the peak demand that was met was 243. And the projections are that during the peak summer month, it will touch around 270 gigawatt. So for that much level of power demand, coal is always going to be an enabler because it is at an affordable rate. It is contributing as a base load factor, and all these things combined together, the power plants have got a good capacity, stock of coal. We too have got around 50 million ton of stock. So all these things put together, rather we are having a comfortable cost of 123 million ton. So we are ready to meet all the demand which may come up in the future for the power sector.
Can you also give us an update on the unfortunate incident that happened at Bharat Coking Coal? Is it now stabilized, operation back to normal?
Yeah, the operations are getting stabilized. It is not in the operational area, rather it was in one area which was the slurry stock was there, and it was getting loaded by the bidders, the prospective bidders, and this unfortunate incident that happens. The inquiry has been constituted, and whatever will the outcome of the inquiry, the suitable action will be taken. And this plant comes under the Factories Act. So the concerned authorities of the Factories Act under that provisions, they have also been informed, and they are also going to conduct a separate inquiry for this.
Sir, in the last 1 year, we have seen 2 of your subsidiaries getting listed. What is the plan for listing of your subsidiaries in FY27?
As you told that in the last year, we had done 2 very successful listing of the Bharat Coking Coal and the CMPDI. In the financial year FY27, we are planning to list Mahanadi Coalfield Limited and the SECL, Southeastern Coalfield Limited.
And how do you look at investments happening in Mahanadi Coal and Southeast? coal mine? What kind of investments are you looking at in augmenting their capacities and the kind of output and production that will come out from there?
Actually, in the Mahanadi coalfield valuation is close to 1 lakh crore rupees. But these are in very early stage to come out with any figures. But we are working on it.